Drenard Trust here. In this video, I'm going to be providing financial education, right? So there's 4 rules to become financially literate that are essential, right? And I'm going to break them each down in the platforms to basically use to take advantage of them, okay? So rule number 1, spend less than you earn, right? There are several platforms that are designed, very specifically to help you spend less than you earn, by, doing things like tracking your income, your expenses, and encouraging intentional budgeting, right? Now, those platforms are like You Need a Budget, which uses a zero-based budgeting system, prompting you to assign every dollar a job, including, spending, saving, and debt repayment, right? It helps you plan ahead, not just track past spending, right? Which basically makes it easier to ensure your expenses never exceed your income. It offers educational resources and hands-on, approach for those committed to active budgeting. It's basically available $14.99 a month or $109 a year with a free trial and a year free for college students. There's Pocket Guard, which connects to your accounts and shows your detailed view of your income and outflows, automatically calculating how much you have left to spend after accounting for your necessities, your bills, and your savings goals. It features basically include a net worth tracker, savings goals, debt payoff plans, and subscription cancellation tools. It's designed for basically a more hands-off experience. So if you want more of a hands-off approach, making it easy to avoid overspending without much manual input. This one is about $13 a month or $75 a year after the free trial. There's Every Dollar, which implements, again, a zero-based budgeting approach, requiring you to allocate every dollar of income to a specific purpose before the month starts, right? Ensures, your income minus expenses equals 0, helping you avoid spending. And then we have Spendee, which tracks your income and expenses, helps you create budgets and analyzes spending habits. It also offers shared wallets for couples or families and supports multiple currencies, right? It's free and, it has free and premium versions available. Okay, so you can also look into that as well. And lastly, we have Honeydew, okay? Honeydew. And it basically focuses on couples that let you track and share finances, spending, and bills together to ensure you both stay within your means. Now, rule number 2, pay yourself first. So to effectively pay yourself first and automate your savings and investments, there are tools and platforms that can help you do that. You can do that by creating like high yield savings accounts. So you have platforms like Capital One 360 Performance Savings and other online banks which offer high yield savings accounts that let you set up automatic transfers from your checking account each payday. So this is ideal if you're building for an emergency fund or saving for short-term goals. Anyways, it's a way to pay yourself first. There's investment platforms and apps. You have Fidelity or Robinhood, which are popular for basically automating investments into index funds, stocks, or ETFs. These platforms basically allow you to schedule reoccurring deposits and investments, making it simple to stick with the pay yourself first strategy. There's the Betterment and M1 Finance, which is also beginner friendly and basically offering automated investing features and portfolio management. There's bank tools and budgeting features. Many banks, such as Citizens Bank and Wells Fargo, offer built-in tools, like the Savings Tracker or the My Savings Plan. So these features let you automate contributions towards specific goals and track your progress, helping you stay consistent even if life gets busy, right? There's robo-advisors, platforms like, again, Betterment and Wealthfront. They basically automate investing by allocating your deposits according to your risk tolerance and goals, right? That makes it easy to invest regularly without manual intervention. So you can get started by opening a dedicated savings or investment account, set up an automatic transfer from your paycheck or checking account to, your chosen savings or investment platform each pay period. Then, you have to prioritize building an emergency fund first. We're going to get a little bit into that later. And then increase contributions to long-term investment accounts as your financial situation improves. You can use platform features to label and track your goals, making the process motivating and transparent. Now, rule number 3, right? You have to protect your assets. So we have it, right? We've built it, but now we have to protect it or we can easily lose it. So you can look into things like liability insurance. You can obtain comprehensive coverage, including, things like homeowners, auto, umbrella and professional liability insurance. Umbrella policies basically provide extra protection above standard limits and cover a wide range of claims. You can, look into LLCs, right? And family limited partnerships. So transferring assets to an LLC or FLP separates personal and business assets, right? Limiting your personal liability if your business, faces legal issues or creditors, right? There's asset protection trust. So these, irrevocable trust transfer ownership of assets, to a trustee, making them difficult for creditors to access, right? There's offshore trusts like, in the Cook Islands or Belize, which offer greater protection, but can be complex and costly. There's retirement accounts. You can maximize contributions to qualified retirement accounts, as these often have strong statutory protection from creditors. There's proper asset titling, so title assets strategically, right? Whether that's a tenancy by the entirety for married couples to align with protection and estate planning. You can use offshore, banking, so placing funds in foreign jurisdictions with strong asset protection laws can shield them from domestic legal claims through, this is keep in mind, this is a high complexity strategy, right? There's strategic gifting, so transferring assets to others, whether it's family members, can reduce your estate size and limit creditor access. But this must be done carefully to avoid fraudulent transfer claims, right? There is homestead exemptions and annuities. So some states offer strong protections for primary residencies, and certain annuities for, of life insurance products. So you can take advantage of, these where available. Now, rule number 4, you have to create an emergency fund. We talked about it a little bit, but let's get into this. SoFi offers a high yield savings account with competitive APY. It has no fees and tools like vaults to separate your emergency fund from other savings. You can automate transfers and use windfalls to boost your fund. There's Navy Federal Credit Union, which provides basic savings and money market savings, basically accounts specifically recommended for emergency funds specifically, right? We don't just want anything. We want something designed for emergency funds. So you can open multiple accounts to separate your emergency savings and set up automatic contributions. There's Vanguard, which allows you to keep your emergency fund in accessible, secure accounts, focusing on low cost and reliability. While traditionally an investment platform, Vanguard basically offers resources and accounts suitable for emergency savings. Okay, so that's that. We have Raisin, which basically is an online savings platform where you can select and manage savings products from a network of federally insured institutions, making it easy to compare rates and manage your emergency fund in one place. We have PNC Bank, which offers tools like the Safety Net Calculator to help set savings goals and basically recommends automatic transfers or split direct deposits to build your emergency funds. Now there are apps again for that can help with emergency funds, while not really technically designed specifically for it. But again, you have the You Need a Budget, right? That helps you allocate money towards your emergency fund. You have Rocket Money, which tracks spending and helps identify areas to save more for emergencies. There's Chime, which is a neobank with automatic savings features and high yield accounts. There's Acorn, which rounds up purchases and invests the spare change, which can be, directed toward an emergency fund. We have Rakuten, which is basically a cashback apps that can help you funnel extra money into your emergency funds, right? So you want to use a separate dedicated account for your emergency fund to avoid temptation. You can automate contributions even in small amounts. It's better if you prefer high yield savings accounts or money market accounts for better growth and easy access. So please keep that in mind. Those are the 4 rules and the platforms that you can take advantage of to maximize those 4 rules. I hope you appreciate this video. If you like this video, please take a moment right now to hit that subscribe button and the like button for more videos like this, okay? I want you to please stay safe. I appreciate your viewership. See you in the next video.